In this video, I will show you how the chart of accounts works in Fynapse, how accounts are structured, how Fynapse decides which account a transaction lands in, and how that flows through to your general ledger. By the end, you will be able to read the chart of accounts and see how it connects to your posting rules and entities. The chart of accounts is the backbone of your accounting in Fynapse. It is the managed list of every account you can post to, and it's the accounting engine that decides which of those accounts each transaction lands in automatically from the details of the transaction itself. So let me show you how that is set up and how that assignment works. We are currently within the chart of accounts within the solution, and I've imported my chart of accounts in via CSV. Each account has a code, a name, and then a few attributes that matter for reporting. So we have our financial statements, tells us whether an account belongs to balance sheet or income statement, and then type groups it further, whether it's an asset, liability, revenue, or expense. We also have a tag. Here I've tagged the monetary accounts, so cash, receivables, and payables, and so it means we can group them later for things like FX revaluation. So how does a transaction actually find its account? We are now within the Accounting Rules Navigator. Once a business event comes through, it will be routed through our posting components, the debit and credit templates the accounting engine uses. Notice our sale event maps to two posting components, not one. This is because a single sale needs two pieces of accounting. First, we record the sale itself, what the customer owes us, and the revenue we've earned. Second, we record the cost of that sale, the goods leaving, the inventory, and the cost of goods sold. The first component, accounts receivable, handles the revenue side. It debits accounts receivable and it credits revenue. The second, inventory sale, handles the cost side. It debits our cost of goods sold and it credits our inventory. Notice how these point to a posting code, not the account numbers. The real account is resolved by an account lookup, which reads the attributes on the transaction, so the company, the department, the product, and picks a matching account. So in this example, we have a retail services sale and a retail hardware sale. We're using the same rules to land in two different accounts. The retail services lands in account 122010, and the retail hardware lands in account 122020. So this is how we can use one small set of rules to drive the whole chart of accounts, with the accounting engine assigning every account automatically. The last piece is how this connects to your entities. In Fynapse, each entity is represented as a node, a point in your organization's hierarchy. Here we've got Meridian Inc., then the region of North America, and then the company Meridian Toronto. And it's the node that carries accounting configuration. If we take a look at Meridian Toronto, it has two accounting bases, US GAAP and IFRS. That's the node telling the accounting engine to account the same activity under both standards, and each base decides which posting component and therefore which accounts to apply to. So a single business event can produce journals under more than one accounting basis, and whichever base it posts under, the account you saw resolved a moment ago is exactly what carries through to the journal and out to your general ledger. Fynapse holds all the detail, the general ledger just needs the count and the summary. So that is the chart of accounts in Fynapse, a managed, classified list of accounts with the engine assigning the right one automatically from each transaction, consistently across every entity and standard.